Hello and welcome to this week's Spinnio Stories. I am extremely excited to welcome Tebogo Mokwena. Thank you so much for joining me. I have
Thanks,
been
Dustin.
talking to you for 4 or 5 months now and just have loved what you're doing with your startup. Around the dojo, you get nothing but major kudos.
Yeah, excited to be here.
You are doing something I find really fascinating. I did work at D&B and Credit Safe between the two of them for over a decade in the business credit space, and getting good data on small businesses is tough. And it's one of the things I found so fascinating when we started talking. Maybe you can just give us a
Yeah.
little background on what you're doing and how you got into this space.
I'm the founder and CEO of a company called Akiba Digital. We're essentially a Pan-African tech data company that is helping businesses identify and reduce risk exposure when onboarding and, I guess, servicing both consumers and businesses for financial products. And I guess now it's expanding into other markets. So, in a nutshell, we essentially aggregate a lot of data that would reduce compliance, lending, and fraud risk. Data that would be applicable for, let's say, scenarios like KYC, KYB, all the way through to scoring, using alternative data. So we plug into the telco data sets, we plug into government databases, we plug into alternative data sources, and we also plug into other kind of data sources that would, I guess, give us a little bit more real timeness of the transaction data monitoring of consumers and businesses. So that's in a nutshell what we do at Akiba. And as you know, I mean, data is such a big issue, I think, around the world, but in Africa, it's a lot more difficult. We're still in the earlier stages, obviously, of building data infrastructures that are accessible. And so things like open banking are not yet even at the tip of what they should be. And there's also quite a lot of data that is prevalent only on the continent that just can't be accessible elsewhere. And so it requires a lot of, I guess, investment in building technologies that can get us that right, that data set, and also really forging partnerships with the right players to be able to have our hands on data sets that most traditional players wouldn't have. So yeah, that's basically what we do in a nutshell, Dustin.
One of the things that sticks out for me is that, small business transactions, small and medium business transactions in Africa are going to probably be much more mobile generated than, what you would normally see in the US, right? Like, would you say that's a
Correct.
differentiator of some of the tech that you've built, is kind of capturing that in meaningful ways?
Yeah, absolutely. So I think a difference is that in the US, everyone is banked. All businesses are banked. In most cases, they're registered and hopefully are registered to IRS and doing their taxes. It's a little bit of a different story in Africa, where majority of businesses are still very much informal. So it's the kind of an individual who's just selling stuff informally to keep the I guess for some sort of a better livelihood. Those are what we call economic drivers in most African economies. Those individuals may not be registered, but in most cases, they do employ their neighbor or someone else. And so they generate some revenue, mostly through cash, but in some cases, they also accept that revenue through mobile money, which is a different way of accepting transactions on the continent. It's pretty much a bank account, right? So your phone
Mhm.
number, your SIM card is your, in a way, your bank account. And so you can send money and receive money from your customers directly into your mobile wallet. So most telcos on the continent essentially effectively work as bank accounts because they have that kind of distribution. Most people do have a SIM card. They may have, your low budget phones. So what we call these yeah, I guess low budget phones that are not even smartphones. So
Mhm.
some people in the US don't even know what that looks like. But it's a it's a phone that has
I
a
did it one
USSD.
at a time.
Uh, yeah, I mean, if you lived in the 80s and longer, you'd probably know what those, first phones look like. And some people still do have access to that. And so telcos have done a really good job at making sure that they can distribute even to the most remote of places that people have a SIM card. And by virtue of having a SIM card, you can transact. So you can imagine the kind of impact access to a SIM card can have, because it's not just a way to connect with people, in which case there's a ton of data on, right? So you're calling, your prepaid behaviors as you top up, as you buy airtime on that phone, that's a ton of data. And then secondly, you use it to collect transactions. So again, there's a lot of data around how you pay, who you're paying, how much you're getting, etc. And so we're trying to build rails that can give us access to those transactional data sets, be it from a mobile, from other wallets, from point of sale devices, which looks similar to your Squares in the US. And so we want to be able to pull real-time transactional data from non-bank sources, because that's what most African small businesses use to accept and transact.
Can you just give us a sense of how your startup has grown over the past few years and where you're at today?
Yeah, I mean, I think one of the most drastic changes is looking at where we were in 2022. We had built an SME tool that basically was connecting these small businesses to financiers, and in between, we would basically try and extract as much data to build an alternative credit identity for them, that would be acceptable to the funders. And so that particular business we scaled to over 12,000 merchants in the first year. And it was mainly meant to help us get access to different types of data sets. And I think at that time, 2022, we only had about 10 access to 10 different data sets. Now, fast track to 2024, we've scaled that to over 100 data sets. So now it means that a client who plugs into the Akiba universe can now have access to over 100 different alternative data sets, which I think is a game changer for anyone who is fast thinking, or forward thinking rather, who does want to be able to cater for a segment like small businesses that have aren't registered, not banked, and want to have access to capital. Another interesting use case for that, for our growth rather, is the amount of verifications or vettings that we've done since we've started. So obviously with 12,000 SMEs, you can assume if we ever score them once a year, we'll probably have done 12,000 verifications. But we then since also exposed our services as APIs, which means any and everyone can plug in, right, these scores and pieces of these data sets as modular services that they can then consume and use into their universe. And ever since we've done that, we've published our APIs into one of the biggest telco fintech API marketplace. We have scaled that to now, I think, over 30 million verifications that we've done this year alone. So we, those sales orders are getting a lot more hectic, and we're having to now worry a lot more about info security and just scaling out the performance infrastructure to make sure that our APIs perform within a reasonable time frame, even when it is like 30 million requests made within a second. So we're now having to worry about those nuanced performance issues and security and obviously data protection laws that we now have to take a global lens on, and not just a South Africa lens on, because those requests are not just coming from South Africa. So those are some of the growth that we've done over the years, and it's honestly something that I never thought we'd be at this stage. I think 30 million verifications in a year is probably something I would have thought we would be doing at post Series A. I mean, we're not even at Series A yet. So yeah, it's really comforting to see that the investment we've made, getting and investing to get those alternative data sources are now starting to pay off. But there's still a long way to go.
Are you actively looking for investment? Because I get the impression that you might not need to be, but maybe I'm understanding it wrong.
Yeah, look, I think we are not actively looking for investments. However, we are looking for strategic partners who, if they obviously see and want to have skin in the game, are very much open to that. So we've had a couple of bureaus who are partnering with us, who are seeing a long-term kind of partnership, and therefore those are the kinds of strategic partners that we may entertain investments from at this stage. But on our roadmap to Series A, which is next year, again, it is also, we want to get to a point where it is an optional kind of raise, where we see it more enabling us to scale into new markets rather than a need for us to survive, because I think at this rate, we should have broken even at Series A or before Series A. And so we're really now taking the approach of a more sustainable way of growing. So sustainable growth, which I think has been a theme since the market has turned on everyone. And it has really allowed us to focus on growth strategies that work for us both, to sustain our runway, but also to ensure that we actually get better ROI in any and every growth strategy that we pick. So we're a lot more, I'd say, stringent in what we invest our time in growth wise. Unlike before, where money can just be thrown at everything and you're hoping something will catch. So I think that train has long gone, and we just don't want to raise funds just to throw cash at any and everything at this stage. Yeah.
You were talking about how some of the bigger clients you're having have helped move the needle, and you were like, I want some strategies to go after these bigger entities that, you know, can do a lot of transactions. What is working for you to go get, you know, some of these bigger clients? How did you migrate from the smaller companies as clients to these bigger ones? What's been working for you, and what's on your roadmap?
Yeah, so I think one of the biggest changes that we made was putting together a growth strategy that is three-pillared. So I think most organizations obviously would either go for one or two, which may be marketing led and sales led. In our kind of experience, and what we've done is we decided to take on a partnership led, a product led, and sales led strategy, all of which kind of depend on each other, a bit like a flywheel. So partnership for us is a way to bring in partners that can give us distribution to those bigger customers. So it's almost a path to a trusted path to get to the bigger customers, because if we go directly at this stage, we just don't have the credibility nor the negotiating power for them not to waste 2 years of our runway, quite frankly. So this way of going through partners that have a track record working with those enterprise customers had at least shortened that time frame for us and gives us, a foot in the door. Once we obviously are exposed to those accounts, the sales part of our kind of growth wheel takes over. And through that, we obviously make sure that we give the client enough of an experience to then get them to test our products. But once they get into our product, they can obviously, that's where the product-led strategy kicks in, and we give them a bunch of free APIs, we get them hooked to our APIs, and they start integrating. I think the moment they integrate any of our APIs, the switch cost starts being higher. And so because the switching cost is higher, it's a lot easier to have demonstrated that we solved a problem. In most cases, a problem that would cost them a lot of money if they don't solve. So compliance penalties are quite hectic, especially in South Africa because of the data laws. In some cases, it's a fraud risk that they just can't take a chance on, because it would take a big chunk of some revenue or even customer trust. And so the moment they touch any of the three pillars of our growth, that typically makes it harder for them to pull out. But some of the things that we obviously have to bake in as part of that journey is being innovative in how we really build that trust and get them hooked. So things like event-based marketing, which actually Dustin, you shared quite a bit of when I met you in Santa Monica this year. So we started doing free lunches for our customers, existing customers who we want to turn into partners, right? So these are existing clients who can refer us to maybe 2 or bigger enterprise customers as a soft sell, because we've just given them a free lunch or we've appreciated them for doing business with us. And so that is also one way in which we've been building kind of a network of referrals that are softer leads to getting those key accounts. And then some of the other ways we've been doing is leveraging other events where we know these types of customers will be there. So the likes of the Data for Breakfast series that are being run by other highly funded companies. So we just come on as I guess as guests, and when we get there, we're obviously on tables with other similar clients, and so we're able to leverage that network. And then other kinds of, I guess, things that we will be trying in the future would be the account-based marketing. Some of the tools that you've given us some ideas around. So the likes of brand gen, where we're now doing interesting stuff and kind of following where publications, where some of our key decision makers are reading publications, and so having customized and personalized banners there. So those are some of the initiatives we've done. And then another one that we have done is building programs or offering free perks. And this is mainly for mid-market. So free perks for startups, with other startups that are giving free perks. So the likes of AWS that's giving a bunch of credits. And so we just list as one of the partners, and our APIs have given us free perks to those startups. We also have our own startup program similar to that, where we give free perks to startups and bring other startups as part of the ecosystem to offer their products at free perks. So that is some of the things that we've done, not just to capacitate the enterprise sales part, but also mid-market, and I think a little bit of SMB accounts, which in this case, we're trying to get them to be self-service. So those we try not to touch at all, but yeah, we're still incentivizing with free stuff. So
and that sounds like that product like growth, obviously part of the business with the smaller ones makes complete sense. What are you using from a sales and marketing?
We have a bunch of sales cadence tools. So the likes of reply.io really drive up cadence and run a lot of sequences from email, so multi-channel sequences, your email, the LinkedIn, and calling all in one place. And that cadence tool also allows us to make sure that each sales rep really touches at least 200 accounts per week. And so it allows us to basically set a certain level of cadence where everyone in the team can have full transparency and view of. And so it's a really high-paced type of tool that allows us to run a lot of the cadences and initial touch points are called outbound, really. And then other tools that we've worked with mostly as well for outbound purposes has been the AI tools that would outreach on LinkedIn. So they'll be plugged into my personal LinkedIn and just reach out to a specific persona that we would have defined, mostly the key decision makers, to try get meetings. And they've really worked quite well for us. And other things that we now starting to touch on, less on marketing, more so somewhere between, I guess, sales, going slightly on the marketing side. I don't know what we call that in between.
Hey, when done right, they're hard to distinguish sometimes, for sure. Like I'm right with you.
Exactly. And so things like, webinars and either hosting those webinars or hosting with kind of trusted parties. But we don't really like doing the webinar stuff. We like giving people access very quickly to our product. So where we can plug in. And so we've done a lot of channel partnerships where there's a lot of marketplaces where we can publish and people can really access our tools at a zero rated for up to a certain number of APIs. And so we've done that quite a lot as well, where we plug into many partners, as we call them, and they just give their our service for free to their clients. It's their retention strategy, and for us as a free acquisition strategy as well. So those are some of the things. And then one that we're still figuring out how to do really well, and probably in Q3 will be the account-based marketing. So that's certainly in our roadmap for now.
Well, it sounds like if you're doing these lunches, like you mentioned, even if they're with some existing customers and stuff, but they're talking about doing referral, building out referrals, sometimes those can help build in your ABM, because they can be, telling you like, no, this company has the same need as us, or I know that guy, saw him at a conference, like that kind of marketing. I love that you're doing that. It's one of the things when I talk to a lot of startups, and they kind of get to that spot where they've done good outbound, but if they're going for these bigger clients, like the traditional SEM, the traditional SEO stuff, isn't bringing in the huge clients always. And that's where that referral marketing, in my mind, just really shines. And it's not easy. And I'm sure you'll have many dead ends where you try things and just it doesn't work. People don't show up. Something doesn't happen, right? But you try enough of them and you go, oh, that one's the one that resonates with our community. And you're in a very different spot than I am, right? In Santa Monica, what's going to work for a business owner in Santa Monica is it could be very different than when you're in Africa.
Yeah.
I'm well aware, right? There's
Yeah.
just different ways they expect to be communicated with, and I might get bombarded with a certain kind of sales email and certain tools that people in Africa aren't. I don't know, but I know it's different. So you got to kind of try things to see what's going to
Yeah.
resonate with the local community.
Yeah, and I think the other thing about Africa is that there's so many countries, right? There's like 54 countries with its own micro, macro conditions. So even the culture of how you sell in one market doesn't quite translate into another. The language, ageism, racism, all these things do factor. And so you kind of have to tweak in every market what works. So what works in South Africa now, we know it definitely won't work in Nigeria, and absolutely probably wouldn't work in Egypt. And so in each kind of market, I think the complexity of also operating in Africa is that when you do scale into all the other markets, it's a little bit different to scaling from one state to another in the US. At least you have kind of some of the base foundations are still there. They all are still have, they're all banked. They still have mobile phones. They're highly connected. They speak English, etc. And so you don't have majority of those issues that we would have on the continent. So I think that's also what makes it a little bit challenging, scaling and really growing a data company in Africa, which also
And
determines how fast it can get access to that data. So yeah, it's a little bit
100%.
challenging here.
But I
Yeah.
can say, as challenging as it is for you, and I 100% believe it is, you can imagine where it'd be even more challenging when some, company from the US or Europe or South America tries to go into Africa. Like, it's got to, like, you have the advantage that at least you are local, and, you
Mhm.
can put people on the ground in a way that might, it gives you a nice advantage there, I would think.
Yeah, and yeah, I mean, in some cases, it is an advantage for sure. And we would love to partner with companies that need data on the continent, because it would definitely be a lot cheaper to work with a local partner like us than to try and build the rails from the ground up. So we've seen, companies take that route, and it does take a long time to get any ROI. So I think in some cases, it's a lot quicker to work through partnerships.
And early on, you were talking a lot about compliance and stuff, because my understanding, and when I was, working in credit safe and DMB in those environments, there was a lot around companies that need to stay compliant with different, like US based companies, European based companies, where they got to make sure they're working with companies that aren't using child labor, that aren't using slave labor, that aren't using,
Yeah,
abusive practices one way or another, right? And
yeah,
so them being able to get an understanding of the people they're working with, as well as those companies that they're working with, the entire supply chain, is huge. And collecting that data is rough. And so I happen to
yeah.
have, I've been on many of those sales calls where I hear people talking about that stuff. So I know that what you're doing has a lot of value to companies outside of Africa as well. Just companies
Yeah.
who want to be doing business in Africa. They want to make sure they're not dealing with terrorists. They're not dealing with all the
Yeah,
various compliance issues, right? So
yeah,
that's
exactly.
that's so cool. It's one of the reasons I love what you're doing, is I think that as you scale out what you're doing, some of the more international companies, I have a feeling, are gonna love to be able to tap into the database and the data sets you're
Yeah,
building.
absolutely. Yeah,
It's
yeah.
it's so cool. So you mentioned ABM. Are there other those strategies? Like, what's on your horizon over the next couple of years here as you look to grow?
Yeah, so we want to double down on events-based marketing, more as a way to retain our customers, but to also educate the newer industries that may not be too comfortable, with this data and how it can actually help them reduce some of their fraud and compliance risks. The second one we do want to test out is this strategy that we just recently learned called Work Your Network, where you can literally ask people to give you a dump of their LinkedIn network, right? And so, yeah, this is a new a new strategy that I
Interesting.
just learned about. And so you can basically create a bigger map of these like connections and see who has the deepest connection to a specific key account. And then you leverage those people who own those networks to then facilitate those introductions. So again, double down on the referral strategy, but then leveraging interesting tools to do that. And then yeah, and the third one is probably the ABM. So we'll definitely look into the double down on ABM, or even start looking at that in the near future. So starting in Q3. So those would probably be the three strategies that we're looking at in the kind of near future.
I realized I skipped over asking that I kind of wanted to, and I still am very curious. What would you say would be one of the sales and or like marketing mistakes you've made? Like, is there any dead ends you went down that you go, oh my gosh, I learned from that one, and we won't try that again?
There's been so many dead ends, I can't even count. But the ones that are literally the most painful were going after banks as enterprise accounts, right? Like when you actually segment down a specific industry and a specific segment and a persona that literally doesn't need you. So most of the things they do are like, oh, innovation, and it's like an optional thing. And then when real things happen, they just dump you. But they would have wasted 2 years of your time. And I remember we went through this process of actually investing so much of our sales time trying to partner with banks, and almost all of them wasted our time. Almost all of them didn't need us, and we just couldn't at the time we couldn't actually figure out what the compelling event for them to buy was. But we still prioritize them, and that was just a waste of time. So now, if there's no segment with no compelling evidence, we just don't go
Completely
that
makes
way.
sense.
And especially, even if they are big, especially when they are big, because chances are you'll just keep having conversations with so and so, and like it's like thousands of people, and so everyone seems like a decision maker until they're not. Until you actually realize there's just no compelling evidence. So that's one of the dead ends that we've hit. In some other cases, we've also taken accounts that were too small, that required too much attention, and so that operationally doesn't work because the unit economics of servicing that account for the ARR just does not check out. So you end up
Mhm.
throwing three people to basically handhold that account to close, and those three people are probably costing you more than the actual ARR of that account. So that also just were some of the mistakes that we made and just didn't need to make. And I think others were really just the figuring out that in some cases there will be a cost of losing certain customers as you evolve. And one of those things is when we started moving towards self-service, it didn't work for some of our existing mid-market accounts, and so that was a cost that we had to be comfortable with, right? So introducing churn as you streamline, because that's the only way you can then have enough capacity to go after the bigger accounts, and have the smaller accounts really go through the self-service journey. So yeah, again, lesson learned, churn is okay. It's actually sometimes healthy because you need to evolve. But it can't be too much, because then that obviously becomes concerning.
Of course.
But
That's
yeah,
really
learn
fascinating, though. That's a really good insight, I think, for a lot of companies is,
mm,
sometimes you might have those customers you brought on early because it was where you were at your business and you thought we can make it profitable. But if that's not, a profitable part of the business, and it's not one that's really going to scale in the future, it makes complete
exactly.
sense. Sometimes you got to make those hard decisions to just cut it, huh?
Yeah, yeah. But you needed those accounts to get to where you are. So I think it's inevitable, right? So I think the mistake you can make is to hold on to the initial accounts at the cost of the big opportunity. And yeah, and that big opportunity in most cases just requires the sacrifice of those early adopters. It's a little unfortunate, but yeah, that's how it goes. And I think the mistake that we can make is just holding on to like the earlier slower growth, because it does compromise the greater growth, I think, upstream.
I love it. If somebody wants to connect with you, you mentioned having, being
Mhm.
interested in strategic partners and partnerships is kind of one of the growth areas you're looking at. What's the best way
Yeah.
for them to connect with you?
Yeah, I'd say LinkedIn is the best way to connect. I'm not on any other socials. I'm not very active on Twitter. So LinkedIn, Tebogo Mokwena is probably the best way to connect.
If I know you and you're watching this and you
Yeah,
want to learn more, feel free. I'll happily make an introduction anytime, because I think what you guys are doing at Akiba Digital is fascinating. I love it. You are a growth story that gets told again and again here within the dojo community. I'm coming out of the dojo studio today. I'm definitely in here, and you guys are such a great success. So I love that
thank
we've
you.
connected, and want to continue I'm sure we'll stay connected here into the future. So thank you so much.
Thank you, Dustin, and thanks for having me.